Hi, and welcome to Slot Leader, a Cardano finance podcast where we try to bridge the gap between the world of finance and the world of blockchain technology. I'm your host, Umed Saidov, and in today's episode, we have a special guest from Europe. His name is Julian Rattcliffe, and he is a seasoned financial professional who's been active in the VC sector, financing fintech industry, and has been involved with the blockchain industry for quite a while. So I invited him today over to Slot Leader to share his thoughts and share his vantage point from the person who is looking from the VC side into this sector and seeing different kinds of potential in the blockchain industry. So I hope you guys enjoy this interview. We've had a very long conversation, so I had to break down the interview into two parts. Today, you will see the first part, and the next part is going to be available next week. As always, I would like to remind our viewers and listeners that Slot Leader is an educational podcast, and as such, we do not provide investment, financial, tax, or legal advice. When it comes to blockchain news, this week was fairly quiet, except for the fact that we have seen the reports online that the Biden administration is apparently tapping Gary Gensler as the chairman of SEC. This is a very significant post in the political arena that touches blockchain industry, and I did some background kind of research to see what kind of views Gary Gensler has about blockchain industry, and I was quite surprised by the depth of his knowledge, to be honest. According to the interviews that I've seen online with him, he has a very good depth and a very good grasp of blockchain technology, and it's always a welcome sort of a step when we have regulators that have that kind of a tight and in-depth knowledge of the industry that they're supposed to regulate. So we will see what's going to happen in 2021, but I think we will have at least a lot of good clarity and good laws and rules and regulations passed. If you would like to know his views, I will post a link to the in the comment sections to the video, where you could take a look at his interview with an MIT student, I believe, and where he talks about blockchain in detail. And I think he's a very sensible person, and he comes across as a sensible person that would like to see a development of blockchain industry. He's not anti-blockchain, so that's great news. In the Cardano community, last week we saw the results of the first decentralized voting for the treasury, the Cardano treasury. A total of 12 projects got funded with the round 2 funding in the Cardano community, and I would like to congratulate everybody who's received funding and is going to build on Cardano. I would like to thank also personally everybody who's voted and supported my project, our project, a Pool Tool upgrade proposal. I'm a member of Pool Tool, and I would like to tell you that we got to work immediately, and we are hoping to build an indispensable tool for both stake pool operators and stakeholders alike. Hello and welcome back to Slot Leader. Our today's guest is Julian Rattcliffe. He is an experienced financier and investor, founder, and a mentor to European technology companies. He has more than 20 years of experience in investment banking, private equity, venture capital investing, and within these roles as an independent consultant, he has been involved in transactions totaling more than 20 billion euros in aggregate, and he has financed deals that range from €500,000 to over 10 billion in funding. Now, he has a consultancy firm called Vertex Partners, which he founded in 2010, and he works with high growth technology companies on business strategy and raising finance. I would like to welcome Julian to this podcast. Good to have you here.
Hi, Matt. Thanks for having me. Yeah.
So, Julian, I mean, I remember we talked about blockchain back in the day, about a year or two ago, when this whole hype cycle started, and I started getting into the blockchain space.
Mm.
Can you tell us a little bit about your experience in blockchain?
Sure. Well, I suppose it goes back to 2013. I had a social media startup, and one of my devs got into Bitcoin and started doing some mining of Bitcoin and Litecoin. And like a lot of people, I didn't pay it too much attention at the time, unfortunately. But then in 2015, I was mentoring some projects which were starting to use blockchain. So one was a commercial real estate a project to manage rent payments and track them and create some credit scorings. And at that point, I got into reading a lot of the papers on Bitcoin and how the Bitcoin blockchain might be used in other approaches. So things like colored coins and a lot of things which I guess haven't really come to pass. So I think since then there's been some question for me in terms of what's the value of some of Bitcoin and some other approaches. Well, and to sort of go back, so after 2015, 2016, I set up with some colleagues a fourth industrial revolution hub in London, basically to bring in tech companies to do accelerators, to connect early stage companies doing blockchain, AI, IoT, and robotics, and connect them to corporates. So the team, we helped set up an accelerator in Zurich, in Switzerland, a Swiss, the Kickstart accelerator, focused on fintech. And from there, got to meet and work with a lot of folks in the startup community there, Zurich and Zug, the crypto valley, as I'm sure you're aware of. And that led us to working with the likes of Swisscom, on some sort of custody solutions and crypto custody solutions for banks, working with the likes of UBS on creating some proof of concept for payments for self-driving cars on the blockchain, and then working within our hub some other companies creating their own blockchain protocols to try to address a lot of the challenges and issues that we've seen with some of the other protocols coming through. So addressing things like scalability, interoperability, and this kind of thing. So I'm still involved with another one of our companies, Keybox, which is focused on, initially it was focused on crypto keys and protecting them, but it's moved more to be a cybersecurity business focused on protecting data by using a distributed ledger. I guess, Keybox has got a history then, sort of came through the whole ICO phase. We thought about raising some money then. But obviously the crypto phase, the ICO phase, there are a lot of projects which didn't work out for a number of reasons. Not least, a lot of them were founded on very shaky kind of foundations. But I continue to kind of be engaged with a number of projects which I suppose are looking at how things go forwards. Using blockchain, using some of the properties of blockchain, using sort of the networks of trust for both finance, for shared data, for things like supply chain and supply chain finance. So I guess my experience has been more on the operational deployment of Bitcoin, or of blockchain rather than focused on the sort of the crypto side of things.
You got me there for a second when you said Bitcoin.
Yeah.
But yes, that's great that we have you here in the program, because I think the reason why I value your views is that you have a unique view of the investors and the traditional side of finance, looking into the blockchain as a potential for growth and investments. And in your experience so far, where do you see that pot of money that's coming from the traditional world of venture capital, you name it? Where are they seeing the potential in blockchain so far?
It's a good question. I think, with all these things, you kind of have to separate out the different use cases and the different applications. I think if you just look at the crypto side, there's a lot of people seeing opportunities to kind of make a fast buck. I think the 2017 boom in blockchain, sorry, in Bitcoin and other cryptos was, nothing gets people's attention like a get rich quick scheme. And so I think that was behind the sort of the bubble back then. But at the same time, I think that allowed or opened the eyes of a lot of venture funds, seeing these ICOs which were happening, and they were kind of getting disintermediated, and thought, well, hang on a minute, our job is to deploy capital into high growth opportunities, and we're kind of getting people raising money through ICOs where we don't really have a look in. So a lot of them went back and changed their terms of investment to be able to put money into some of these token projects. So I think on that side, there's been a change in mindset, and VCs are good at adjusting their model quickly. So some people have come in on the token side. I think on the blockchain side, and I think this goes to a lot of other blockchain projects, which is that people can see the value added through using blockchain, right? In that you have a distributed database, you can engage a lot more people. It has this properties of a network, and values, value attached to connecting your whole network into your system, whatever that may be. The flip side of that is that then you need that network to be engaged for it to work. So where we've seen people trying to do supply chain engagements with blockchain, you need the whole supply chain to be brought into it and kind of be adding their data along the way, which is not always inevitable, particularly as supply chains are a lot more complex and messy than people kind of give credit to. So yes. I think there's still a lot of optimism, and there are a lot of blockchain projects or distributed ledger projects which are being funded and financed. I think people have to take, investors have to take a long-term view on how those are going to become established and how they're going to build up those networks. I think investors will equally have to bear in mind or have a good knowledge of what the underlying protocols are, right? Because I think some of them are not that interoperable. Some of them are quite hived off from others. But then you're seeing the likes of Cordo with a lot of banks engaged in that. The R3 project, which is making it a lot easier for all of them to kind of run test projects off of it. So yes. I think, there's still a lot going on, and a lot which is going to, over the next few years, get a bit more public attention. So as I was saying, we've been through the big blockchain hype cycle, and sometimes these things just take a little bit longer to really get the traction and do the hard yards before they start really coming out into public.
Yeah. So one thing I noticed this time around is that in 2017, as you noticed back then, probably there were a lot of projects with questionable value proposition. It was just I remember it was just one company just slap an ERC20 token and then start fundraising without calling it fundraising, and try to remotely attach some sort of utility to that token and say, okay, well, if you have this token, it's going to give you X, Y, and Z. I think this time around, we are very removed from that hype cycle, which was very retail driven. We are seeing, at least in the United States, very sizable companies like MicroStrategy has allocated realistically $1.2 billion in Bitcoin. And there are strategies that, the cash is going to be a little bit too toxic. No, I wouldn't say too toxic, but, with negative interest rates, you have to protect your cash positions. And if you are a technology company that has a lot of cash, Bitcoin might be your way out. Now, and taking into consideration what's happening in the financial markets with all the financial assets being overhyped and in the bubble territory, that might be a nice move. So my question is, if we go back to the rationale right now, we're seeing more institutional investors getting into this space. I think I've been reading the note by the MetLife, which is an insurance company in the United States, who just recently released a sort of a primer that I hope that reflects their views of the space, and they are looking into this space as a way of diversifying their portfolios. Now, today in this environment, we are so much far ahead in terms of value proposition for the blockchain and the types of instruments that are being built and released. And I'm talking specifically about the third generation blockchains. Now, in 2017, the only game in town was Ethereum. It was clunky. It worked. I mean, it was a good proof of concept for their for the idea, but we've come a long way from then. We have Algorand, we have Avalanche, and last but not least, we have Cardano, that are leaps and bounds and head and shoulders above those early days of 2017, when we only had Ethereum. And Ethereum itself is transforming into a proof of stake, which is what the third generation is. They will take a little bit of time to transform because they have a big luggage of things to sort out. But we are talking about enterprise-grade software being developed by scientists that's being available right now in a public domain and public blockchain. Now, knowing that and understanding these implications in the background, do you think we will see a renewed interest from the institutions to come and invest in protocols themselves, and in the types of applications that they will host?
Yeah, I don't know. That's a very good question. It's a very good question. So I think what we've seen over the last few years is that institutions have got into blockchain and DLT. They have done experiments with them, but then a good number of them have not really got much further than experimenting. They haven't really got to a point where they've deployed anything. So, for example, I know RBS quite well. They've done a lot of Royal Bank of Scotland, done quite a lot of employed a decent sized blockchain team who experimented with all the different protocols, really. Looked at a lot of different use cases, worked across from a lot of projects who were promising to do things differently. And I guess my sense is that none of those have really transitioned from experiments into something which can be really applied in anger. So I think we'll probably continue to see people, banks and corporates, experimenting. To your point about institutional money coming in, the likes of Square, I think I read, have put a lot of their treasury money into Bitcoin, and I think that again, I think we need to sort of separate the crypto and the crypto value side of it from the blockchain application side of things, right? So on the Bitcoin and the crypto valuation side of it, I think what's very, very different this time to the last hype cycle, I guess 2017 hitting those peaks then, was that it was all retail driven. And in the crypto winter that followed, everyone in the space was saying, well, look, we need institutional money to come in and take this seriously. And frankly, that's what's happened in 2020 with coronavirus changing the way that people are doing business, changing, obviously then sort of precipitating a recession, precipitating a lot of money printing and federal money coming out, people and fearing inflation. So there's been a lot more institutional money committing to Bitcoin, and I think if you followed the prices of it in the first part of this year, it's kind of gone up, and where it's dropped, then money's come in to sort of support it at the sort of 30 to 40,000 level where it is today, and I think it will continue to have upward surges, and then when it falls back, you'll see people buying in the dips. But there's a lot deeper pool of money to come in and support those prices going forwards, and so you're seeing these estimations coming out for, or predictions for price at the end of the year, going from anywhere from like $65,000, and then JP Morgan $140,000, and Citigroup, Citibank, over $300,000. So I think that there's a lot of optimism in terms of the pricing of Bitcoin, and every other crypto is relatively correlated to Bitcoin. On the blockchain side of things, people using blockchain, I think some of the protocols are maturing, and so you're also seeing, I suppose, more projects which are getting closer to being deployed. So when I was talking about banking and the incumbents like RBS and Barclays and some others, UBS, have sort of been experimenting with blockchain and not being able to really see how they can use it, but others have jumped into the R3 and Corda projects and sort of may find ways to use that. But then there are other independents putting together whole banking platforms based on blockchain. So Thought Machine is a good example in the UK. I can't remember who they've partnered with. They've partnered with a kind of relatively early stage bank, but I can see that being very valuable. And I think there's going to continue to be more blockchain projects like that, which start relatively small and humble, but then really start to show their value down the line when they've got cheaper costs and they can really leverage the benefits that the blockchain gives them.
Yes, I mean, I have seen the difference in attitude in the United States, at least with the incoming administration being, I believe, more open to the open blockchain. Particularly, I would point out the recent OCC's letter, which is the banking regulator in the United States, clarifying in no unambiguous terms that the banks can use open blockchain to transfer value. Now, if I were a bank and I'm using, let's say, ACH, and ACH is costing me X number of dollars, I believe I owe it to myself and my shareholders, at least, to take a look at blockchain as an infrastructure for transferring money. For one thing, the way I see it, transferring money over a blockchain, open blockchain, takes care of counterparty risks, right? So in every year in the United States, at least, we have $56 trillion being transferred between the banks in the United States over what we call an ACH network. Now, that network allows you to transfer money if you're a consumer through the bank for free if you're willing to wait for 3 days. But if you are in a hurry and you want to transfer money immediately or within the same day, the same network is used in order to transfer your wires, and that each transfer can cost up to $45 per transfer. And my sense is that, and again, I don't know the details because I haven't looked at it in quite closely, but as an entity to remain profitable, ACH will have to probably is financing the cost of operations through the wire transfers. So the wire transfers are probably subsidizing all the other transactions that are taking place. Now, every time a bank basically transfers money, it has to go through a clearinghouse, right? The ACH is a clearinghouse that makes sure that everybody who is transferring money has that money, and then passes the messages. And that role could be completely taken care of and disintermediated by an open blockchain. Because you are actually, let's say that I'm transferring the digital version of the United States dollar, which is USDC, which is regulated. It's open blockchain. It's issued on Ethereum, and you can transfer it from one wallet to another. And you are transferring effectively United States dollar, so you don't have to worry about the other bank being able to actually honor its commitment, things like that, or have any uncertainty about the solvency of the bank when they say, okay, well, I'm transferring you this much money, or you owe me this much. So on the banking side of things and on the ledger side of things will become very easy, because you only have two wallets to talk to each other, and as long as you have the address of the other bank, you can transfer it, and it takes place almost instantaneously on the third generation blockchains like Cardano. I mean, and if you take international transfers, you are actually your gains are much higher, because if I'm sure you know, Jules, that when you transfer money from country A to country B, and if the country B does not have the banking in country B does not have the banking relationship with country A, you might have to do a lot of hops, and all those hops within the banking industry will cost you money, which is why the money transfer services charge you up to 20% of your fees to actually your amount to send your money. So when the banks are on an open blockchain, and that's something that's I believe is being realized by the regulators here in the United States, then all these costs that are associated with infrastructure, the current traditional infrastructure, basically go to zero, because all you have to do is just open an account, which is free, and then you tell the other bank to use the same sort of a payment network, and you just transfer the money. And whether you transfer $2 billion or 2 cents, it costs the same amount of money to do it.
Yeah, I mean, the thing is, in that the picture that you painted, it sort of suggests there's no place for banks, and they are completely pointless. But I think you have to bear in mind that wallet to wallet transfer relies on quite a lot of responsibility for the individual or whoever's holding the wallets, and banks do have a role to play in guaranteeing that people don't lose their money by being stupid, which a lot of people need that help because they're not technical. And
absolutely. I mean, in this picture, Jules, just wanted to clarify. In this picture, I don't see the banks going away, because you can transfer the money yourself.
Yeah.
But I do see them leveraging the open blockchain in order to cut their own costs, for that matter.
Oh yeah, absolutely. I mean, the likes of MasterCard and all these other folks have got divisions looking at blockchain and seeing how they can port what they're doing onto those rails. And I'm sure that if they can, I'm sure they can see the cost saving opportunities there. And frankly, it's for all the incumbent financial institutions to pull their finger out and get on top of these new technologies and deploy them. I think the people who get there first will protect themselves from being disrupted.
I think, honestly, I think to your point, PayPal has gotten into this sphere, into this space, in order to protect itself from being redundant down the road. I honestly think that all the money transfer businesses are in jeopardy because of the blockchain. And PayPal has a big sort of client base that it could basically offer the same services to their clients, but change the underlying infrastructure to blockchain, and it will cost it would cut a lot of server costs. You don't have to maintain all these infrastructure that they probably pay a lot of dollars to actually maintain all of that. Imagine if you were to send money from point A to point B, and you are an approved. I mean, that's one of the reasons why PayPal is used, is that the money is kind of clean. It's changing hands between the people who are approved or known to the system, and nothing funny is taking place there, hopefully, because they have some KYC and AML regulation in there in the entry and exit points. So I can see them basically using the infrastructure of the open blockchain, just the way that we use internet nowadays in order to conduct our business, but without having to pay enormous amount of money for our own sort of private internets and make them talk to each other. So I think that's where we're going with open blockchain. I think the beginning was a little bit bumpy, because both the regulators and the incumbents had to come into terms with changing landscape. eventually, I think they realized that this is inevitable because you can't compete with open blockchain, being a money transfer business with your old traditional cost structures and relying on the old rails because they are inefficient. They have been made completely redundant. And I'm saying that as somebody who's tech savvy at this point to understand all these technical details, but it will come through, these savings will come through established services like PayPal already, right? And the companies that do not have that luxury will have to kind of go away or whatnot.
Yeah, well, I think to your point, it is sort of third generation blockchains, which make this a lot more feasible. I think the likes of Ethereum have been fantastic in moving things forward, but they've always had this issue around you can't. It's not commercial to build your infrastructure on a platform where you don't know what your cost is going to be next year. It could be 10 times what it is this year. So I think it's with the changes in consensus protocols are going to have big consequences for the usability and applicability of blockchains. So I think that's definitely something which has facilitated the uptake and use of it. Yeah.
Now, I want to change the gears a little bit. I know that you've been talking to the authorities in UK. Can you tell us a little bit about your experience there? You've been a public speaker on the blockchain and contributed to the UK government's House of Lords report on the distributed ledger technologies for the public good. Can you tell us what has been, what kind of things you've learned and what kind of obstacles people generally in that realm have with this technology?
Yeah, well, I think it's the same when you talk to anyone who's hasn't got up the curve on blockchain or Bitcoin or crypto or distributed ledger technology. For them, it's all the same thing. And they've read in the newspaper that Bitcoin is bad because some bad people use it to send money or whatever. And so in the first instance, you've got to make sure you're speaking to people who understand that a distributed ledger is a sort of base technology on which a blockchain sits, and one application of that may be a payments facility like Bitcoin. But in terms of talking to the House of Lords paper, that was around looking at what we can do with distributed ledger and how it can be applied. And look, there's a lot of optimism and acceptance of new technologies and looking at different ways of trying to do things. I think when you speak with governments, though, you've got to be aware that their timeline is very different, right? So they set up a series of talks, discussions, what they call all-party parliamentary groups, where they get together every 2 or 3 months to discuss the implications or opportunities, right? And so they set up an APPG around blockchain, and the timeline for talking it over and trying to come to a view was over the course of 2 years. So, I think being a technologist, you'll appreciate that the timelines in our minds are a lot shorter. We kind of look to see how something can be used and try and get it proof of concept or some sort of MVP done in 6 months, and then try and get something operational within 12 to 18 months. But in government, it's a lot more talking and thinking. They move a lot more slowly. They tend to, if you understand where they're coming from, which is about forming regulations and taking a much longer term view, they have to be a bit slower and more pragmatic, I suppose, in the way they absorb this information and think it through and think about all the logical consequences of developing regulations, for example. So by definition, it's going to take a lot longer and a lot slower. But as I say, the appetite to engage and see the interest and see the opportunity here is there, but it'll take longer than the commercial applications of blockchain, for sure. I mean,
have you seen it?
The point you're making before about banks and the financial opportunities. In my mind, that's the kind of logical sequence of uptake with things like blockchain. It's going to go where it makes most money first, and that's going to be in the finance field. And once we get some solid applications set up in the finance space, then I think you're going to see more use cases leveraging that experience in other parts of industry, whether it's in supply chains, whether it's in I don't know, a number of other applications, but sort of building on that finance layer.
I see. Now, just a follow-up question on that, though. Have you seen any evolution of thought process between 2017 and now in the regulatory side of things in the UK? And are you thinking that they understand the space better now, or are they in more or less the same level? Do they understand? And because it's very crucial, at least on my side in the US, I see a very good sort of robustness of regulatory bodies and people who are in charge of regulation here in the United States are demonstrating a very good grasp of the underlying technology, and it has changed considerably since 2 years ago. And I just wonder, like get a temperature check and see if you're noticing the same kind of change.
Yeah, I guess it's question mark whether there's been a dramatic shift. I think you've got to appreciate that the UK FCA approach is more reactive than proactive. So they're not going to come out, and that's in contrast to somewhere like Switzerland, where FINMA has been proactive. They've come forward in just after the whole ICO boom in 2017, and they came through and said, well, look, there's 3 types of tokens: payment tokens, utility tokens, asset tokens. And so they set out a framework for really defining these things, understanding them. And they've set out approaches where if you have a project in Switzerland, you can get a no action letter. So they will look through your project proposal and then understand where it's categorized, and then understand what regulation will or will not apply. So that's sort of very positive and engaged regulator. The FCA is more responsive. So if you do something wrong, then they'll turn around and tell you something wrong. At the same time, they have been engaging. They do have a sandbox, and they have been engaging with people and blockchain projects to sort of really understand what they're doing, how they're trying to go about it, and ultimately to make sure that end users are kept safe. I mean, that ultimately is the purpose of the regulator, is to stop people getting ripped off by unscrupulous actors.
So no, that's absolutely understandable, Jules.
But so I think I don't feel there's been a big change or shift, but they're open to discuss projects, and I don't think they're stopping anyone from doing things at the moment.
Thank you for watching and listening to our podcast today. If you like the type of content that we're putting together, please don't forget to subscribe so you could catch the next episode, which is going to be definitely more interesting as the time goes. I'm your host, Umaid Saidov, and you've been listening and watching Slot Leader. I will see you next time.